Well, what's up, everybody? This is your girl, Erica Williams with Just Stock Profits. I brought on my co-host, Dave Williams, and I'll let him introduce himself. Hey, Dave.
So, how you doing, Eric? I'm really glad to be on Just Stock Profits. Appreciate you having me on. My name is David Williams, also known as Diamond Dave. I'm the founder of the highest paid part-time job at the Road Options Training Program, and I'm really excited to talk about what happened in the market this week, what we should look for in the next week, especially for people that really want to understand not only how to make money in the market, but also how not to lose money in the market.
Mm-hmm. So, what are some things that have been like hot now? I know the stock market's crazy, but an oldie but a goodie that's been very popular has been AMC. Talk to us
Yeah,
about it.
definitely. Okay, definitely. And this is going to also transition into all the people that spoke about how they wanted to try to figure out how not to lose money in the market. So
Mhm.
AMC had a really, really strong run. We were calling it one of the meme stocks. And what it was a stock that had been beaten down historically. It was at a certain price point, had a really high short percentage, and kind of I would say the online Reddit crowd kind of became a champion of this particular stock. For people that are looking at this particular company, I want to try to give you some things to look at. So this is not going to be investment advice. I'm not a financial advisor. I'm not here to represent you as a fiduciary, but I want to try to really show you how maybe not to lose money in this deal.
Mhm.
So what I want you to do is that if you're at home and you have the ability to look at a computer, look at AMC, let's say maybe over the past 5 years. So look at maybe a 5-year chart.
Mhm.
And then if you look at that 5-year chart, kind of see that AMC has been kind of going downhill over the past 5 years. Then I want you to maybe look at a 2-year chart and understand that AMC over the past 2 years has also been going downhill. So then the question I will want to ask you is that if you're looking at investing in AMC or you're currently in AMC because you believe that it's going to shoot back up, what was AMC trading at before all of these situations happened with COVID? So before we had this explosion of COVID, where was AMC at about around their price point? It was probably a little bit almost double, but a little bit under double what they were about a year and a half, maybe 2 years ago. Then we understand that it fell down because of COVID because nobody was going to be able to see the movies. So the question I want to ask you is that where do you think AMC gets back to? Best case scenario. Because if let's say we could use our magic wand and use a genie, or we have the power of God, and we can make everything go back to normal, right? Let's say how everything was. Let's may say 2018. Where do we think AMC was trading at? And so then that would give you a narrative of kind of where you think AMC could go. One of the things I teach a lot of my options trading students is always look at a 5-year chart of a company, and that kind of will get you to understand its trading behavior over the past 5 years. And unless something really changes in the market, it's really going to get outside of that or under that. So you may see a gradual upturn or a gradual downturn, but you're really going to see this explosion. And so
And
when we look at AMC, it was trading at a certain number for so long, it exploded up. But what we've seen it is doing is going almost right back to that number again. And so the way you don't lose money in the market is you kind of understand what is a historical price pattern of this stock. And if the market has not fundamentally changed for that particular company, even if it gets outside of that, it's normally going to return back to that.
so exactly to your point, this stock historically has been around $12 for the
Yes,
past
ma'am.
since like 2018 when you said April 3rd. Now, why this is so important, April 3rd, it was 2020, which means like, the third week in March was like the nail in the coffin of like most states. They were like, hey,
Yes, ma'am.
something's going on. I even had a
Okay.
birthday party March 10th, which is the day after my birthday. And literally all my friends were like, yeah, you've been hearing the news about this virus. And then all of a sudden 2 weeks later, it was like, no, seriously, we're all shutting down. So at April 3rd, 2020, was the reason this is significant, it got down to $2.27.
Yep.
I believe from a like novice perspective that all these hedge fund companies were like, yes, it's about to die. We're going to get it. We're going to cash out all this money. And then that's when you had this kind of rumbling, which you've had it before then, but I feel like the kind of the fight, because February 14th, it was $7.
Yeah.
And literally April 3rd, it was $2.27. And I have a strong feeling that in a lot of the chat spaces that they were in, because just like GameStop, more GameStop than AMC, but GameStop was being just drugged to the ground.
Exactly.
But it still had tons of people at locations and in waiting lines. AMC, everywhere I've seen AMC, they're brand new. They're not old
Yeah.
movie theaters. They're brand new movie theaters. And it's like they upgraded with the times and they're being punished for it.
Yes, ma'am.
So this is part of what I, as a novice on the outside looking in, like I see it shooting up to $3 and $9, but historically it's been about $12.
Yes, ma'am. Around
12 to 14.
$12. Yes, ma'am. And so with I know we have a new Fast and Furious supposedly coming out this summer. That'll bring in a lot of good, return to movie theater money. But like I said before, is when you're looking at these four-wall movie theaters, they're in a new marketplace now. So Disney's getting ready to release earnings later this week. We may talk about that a little later. They're going to definitely be talking about their streaming services. So we know Disney is over the Star Wars franchise and some other franchises that are really, really big. So if the big movie production houses decide to push everything to the stream, what does the marketplace look like now for the movie theaters? And what we're seeing is that the whole environment is changing, because I really believe in 10 years, you're going to be watching a movie through Bluetooth headphones on your mobile device. You're not going to leave the house anymore to watch a movie for the most part, unless it's something that's going to be very exclusive and very maybe limited, similar to like what people were doing for the IMAX shows. So, when looking at this type of marketplace, I really think that movie theaters are very similar to where Blockbuster was at when Netflix was starting to get a lot of momentum. And they really couldn't figure out how to reposition themselves in the marketplace to be able to combat the change in the economy. So they may be able to still function. But if you're in this deal, where do you think is going to be a good price for this stock to trade at? Because a lot of people think this thing is going to shoot up because of a short squeeze. But if it doesn't, then where does the company go?
And the crazy part is the AMCs I visited, they're like this high tech experience, IMAX and food, and even when I was in Washington D.C. and I was actually shocked because I'm not bashing D.C., but some places in D.C. seem old, and it was still a really brand new AMC, just a smaller size. And what I told my friend is I only see movie theaters, and this is where I think companies have it wrong. You have a bunch of people moving to rural areas, like. They're out. They're going back to these towns because they can work digitally.
Okay.
And this has been a trend for a while, like where they're just keep moving further out. What I see back in my hometown, which is a military hometown, is they have 9 movie theaters and they never shut down officially.
Okay.
And it's because that town really doesn't have a lot to do. It's like you got all these young military people and they got a paycheck, and every 2 weeks, when that paycheck comes in, those movie theaters are packed. Lines around the building, cars around the building, nonstop. And I think that's where the money's going to be at. It's going to be in the buffer towns or the military towns where there's not a lot to do. But can AMC make it in those type of towns? And Fayetteville's not small. I mean, it's 300,000 people.
Yeah, that's a nice size city.
It still has that small town, not enough activities to do kind of thing.
Yeah, and I can understand that because like I'm from the state of Florida, and you have towns outside of a lot of the major cities where, like you said, the thing to do is to go to the movies. And so, but AMC has always had a dominant footprint or a big footprint in a lot of the major cities. So do they need to try to figure out, maybe we need to pull back out of the major cities where people have a lot more entertainment options, move to the rural areas, and then just really try to establish ourselves there. The question is, and this is the issue when you're talking about the movie game, a lot of times movies want to always hit major markets.
Yeah.
So the question is, they want to hit the major markets first and spread out once they realize that movie has some legs. So we're looking at a movie like Fast and Furious. They a lot of times are going to want to hit the big markets first and then spread out. So then AMC may feel like if we're in some of the secondary smaller markets, we're going to be late to get these movies if we get them at all. So then, like I said, is they got to figure out how to compete in this new space of streaming movies. A lot of the actual companies that actually are producing the movie are going to also control the distribution of the movie, similar to like a Disney or Netflix. How do we compete with that? And then also, if we do push to the secondary markets that are kind of the smaller cities, around 300 to 500,000, will we even get access to some of these films? Because it's like, let's say a Tyler Perry movie. Tyler Perry movies normally come out to what they call black urban markets.
Yes.
Then,
yes.
Yeah, you know what I'm saying? So then if
Wakanda
we're AMC,
forever too.
Exactly. And we're not in some of those markets, but we may feel like this film's going to be profitable, but we're not in the markets to take advantage of that. And then if it hits in those markets, then they get spread out to more and more markets. They continue to roll it out because we can justify now that cost of doing that.
I will even say Black Panther, they underestimated it.
Yeah.
I know for a fact because I'm here in Austin, Texas, and the black population is 6%, but it's 20% in the edges. And they put on these full on decked out, dress up, theme parties, but they did it in Houston and they did it in Dallas and they did it in San Antonio. They sold out in 4 hours.
Yep.
And then it was like, oh crap, this is going to be massive. And so even Atlanta and Florida and all these places were like, it was like they were delayed.
Yeah.
Because if it was anything, and this is my personal opinion, but I feel like, oh, this is Black Panther. You know, black people really love this. No, I had white friends go 4 and 5 times to go see this movie
Yeah.
because it was different, it was new, and they underplayed what they thought it could do. And that's why, I mean, look at the pay. Look at the pay of the cast of Black
People on the
Panther.
cast. Exactly.
They,
Exactly.
you're talking about Angela Bassett getting
Yeah.
paid crumbs. You're talking about half the cast being paid so low, and this is what they don't want to talk about. This is why it took so long for them to get the movie number 2 out. Not because of COVID, it's because every single one of them were like, we need rights. This movie did so well. We are going to go to court and you're going to give us some rights. And luckily for them, it was kind of that push and pull of like, everybody gets a little bit of something. I know Angela Bassett does out of everybody. I know she has some rights, but I don't know how much. But we have an economy is playing catch up. It's being reactive instead of proactive. If these are the best and brightest minds couldn't see Black Panther was going to absolutely be played 4 and 5, like it played for months at the movie theater. How can these people be expected in these offices to plan out for AMC to move to the rural areas?
Yeah, and I agree with you, because I think they thought Black Panther was going to be like a niche film, and they were kind of trying to take advantage of like the woke environment without realizing that they had such a core audience, because like you said, it was something totally different. So this was a character that had a lot of appeal to a really strong core fan base. And I don't think they realized until it started really running how big the movie was going to be. Because I remember when they started dropping the trailers, I was on YouTube and a lot of the reactions were from non-Black people, and they were really, really excited about it. So I felt like it was going to be a really big movie. But I think, like you said before, is that they're very reactive as opposed to proactive. And it may be just because they're worried about outlaying that capital and then it not going the way they think it's going to go, and then now they're stuck with this particular film asset that they can't sell. Now we know that Black Panther is going to be a money-making film asset forever, right? Yeah. But they didn't know that when they were
in the space.
Exactly. And we can launch different characters, and we can also split off different characters. So we now have this particular asset that we control, that we can continue to make money. And one thing about Disney is Disney has film assets going back 50, 60 years that are going to always make them money. And that's really the game they play. So now they've discovered that with Black Panther. But we said with a company like AMC, is if they kind of move outside of that mainstream, will they be able to tap into films like Black Panther Part 2 or any of the other spinoffs that they may have, maybe some of the Marvel spinoffs, some of the maybe the DC spinoffs that they want to try to take advantage of, but the film producers or the distributors may be like, well, you're in the secondary market, we don't want to send it to you.
Yeah, the only reason I think so much about the hometown is there's a movie theater, and on Tuesdays they have $5 movies, and the parking lot they have like 1, 2, 3. I think they have 9 screens. The whole parking lot, this whole from all the way to the grocery store to the other side to the other end is full of cars. Like the police are parked out there, like chill out, people, and it's for $5 movie on Tuesdays. And so I'm thinking if you're smart enough, your AMC, you make a smaller movie theater, you keep that high tech feel, but smaller movie theater, maybe just 3 screens, 4 screens. And then that lets you have that full theater numbers, percentages all the time. Like, yeah, every screen's full. Yeah, we're always full. Kind of effect, because when I came home, I'm like, oh, it's gonna be crazy with COVID, and they were full. They were still absolutely full.
Yeah, definitely. Yeah, so we want to see how they roll out. So definitely, like I said, if you don't want to lose money in this, kind of look at the historical trading pattern. Because like I said before, is I think once we get done with some of these summer rollouts and maybe even the Christmas rollout, the early Christmas fall rollout, we just got to see how they're going to respond to this new changing market that definitely is going to change regardless of what they do. The whole overall film industry is getting ready to change. And I think younger people are going to want to digest films differently than maybe we did when we were their age.
For sure. And I think I remember my nephew and a bunch of 13-year-olds, they all went to the films together, and everybody parent dropped them off. And that's still a thing. And I was like kind of glad for it. But it was the soccer team. Someone asked, could AMC do the same thing as GameStop? GameStop was $5 stock, then shot to $400, settled at $160, which is high. Why is it not falling back down?
Okay, and CG3, that's a great question. So what I want to do is we're going to get you to look at it the same way that we were talking about looking at AMC. So when we look at GameStop and we look at their historical, maybe let's say their 5-year trading behavior, right? So everything above a certain number is very abnormal. And
Yeah,
so the
this is their
question is
5 year. I'm putting it on the screen.
exactly. See, so they literally flatlined like the monitor at the hospital, and then they spiked up to like 400 and fell back down to
Sorry,
160.
I'm
No
sorry.
problem.
Got me.
Yeah. So it's the thing. So you got to say now when CG3, when you look at GameStop, they have a large amount of institutional buy-in, right? They got a lot. It's almost 80% institutional buy-in from what I've been reading. Now,
Yeah.
this is what I want you to understand. When the institutions decide to leave that thing, it's gonna dump really hard, right? Now the question is, how long do the institutions decide to stay in it until they realize that GameStop can't justify this price? So GameStop, they're trying to kind of push towards more of an e-commerce and also still be somewhat of a destination environment. But if the institutions say, you know what, we can't justify owning this at this price point anymore, we want to trim our position and get out, I think you're going to see a big exit towards the door. Because you talked about they were at 400, now we're at 160. What's the big difference between 400 and 160?
So
And
this
so
is
now
the
we're at
5 year
160.
chart. The
Yes,
5 year
ma'am.
chart says in 2016, $30.
Exactly.
And then you say, let's say 2019, $12.
$12.
All of 2020, it goes down from $8 to daggone $2. Go down to, again, almost to the bottom, $2.
$2.
Yeah.
And then it shot up to 50, then it shot up to like one something, then it shot up to 400. It stayed there a relatively short amount of time. It came right back down. It's been trading at 150 something, 160 for a while. It's consolidated around that price point. But 160 has never been any of their historical prices.
Yeah.
So nothing has changed about the marketplace of GameStop. Nothing has actually changed about the company, the way in which they do business. The business model is the same. So I don't believe 160 is sustainable, but because they have such strong institutional buy-in, it'll stay there until they leave. The question is, if you buy at 160, where do you see it going in the future? Do you see it going up? And then if it goes down, you bought in at 160, you might have to exit out at $50.
I mean, what could GameStop even do because I mean, to me, all this is flooding in. What can they do to make it better, right? Because they keep bringing them down there to court to talk about this short selling, and they're like, okay, like, what do you want me to talk about? And then again, SEC is like hinting at new rules for Robinhood. And you know why? Because it's the cheapest one to get on, cheapest platform to get on.
Yeah.
You've essentially outsmarted people who study this every day and every night. Just for a little bit. You've outsmarted, Gary's dad, who's been doing this for 30 years, and he's like, what just happened? Yeah. So, I mean, I'm telling y'all, this was like a feel-good story to me, because I was watching, and I watch CNBC and Fox Business all the time, and it's like usually very boring, consistent, background noise for me to work in. And that day, GameStop was going, I mean, it was literally like companies were screaming. It was like they were coming on at CNBC like, hey, this is crazy. This is crazy. I'm like, and you're like, I've never seen these people like react like this in all the years I've been watching CNBC. It's very dry commentary, which is fine. It's just quite funny. So yeah, I hope that answered your question.
They claim to be making a movie on this GameStop thing.
That would be awesome. You guys post your questions inside the chat. I'm just answering a few here and there. Let me see here. And did you want to head on over to copper, or you want to go on to?
Let's definitely talk about copper. So what we want to talk about, and this is for my people that are really into the EV space or also the alternative energy space. So one of the things that I really used to teach people back in the day when I did a little bit of business consulting is when you're looking at a particular business, don't just look at that physical business or that specific individual business. Look at what we call the whole value chain. So what is everything in that particular industry that allows that business to operate? So when we're looking at the alternative energy space, but let's say hypothetically, let's look at maybe the cars, right? We're looking at the car. A lot of times we get fixated on the car assembler, or some people call it a manufacturer, like the Tesla, the Neo, the Xpeng, yada, yada, yada. But there's a whole value chain that is in line that supports that particular car company. One of the ways in which you can benefit from this particular space is to start to understand what minerals or what particular things are going to have to be in this particular value chain to allow these particular companies to be successful. And copper is one of them. So copper is a particular item that a lot of people believe is going to be very essential to the alternative energy space. And you will want to look at maybe copper stocks or even copper ETFs to potentially be good places to invest in, because if we need more of that for this particular space, that may be a better play than looking at an individualized company.
Okay.
Yeah.
Because what's funny is I put a little picture up of where I had some silver and I had some copper.
Okay.
You know, copper's cheaper, so I got a bunch of copper in this picture. People are like, "Oh my God, where do you buy your copper?" And I'm like, "Same place I buy my silver." And I think people don't understand. Like, you know, I remember talking to somebody, and I'm gonna just say it this way: he was a white man from the suburbs, and someone stole the copper out of this old house he was and he's like,
Yeah.
"Why would they do that?" Like he was so like, "Oh my God." And everybody at the table that was Hispanic and black and me are looking at each other like, because they can get money for it.
Exactly.
Like they can strip it and get money for it. And this is a old thing. This isn't a new thing where they're taking copper out of house. This is an old thing. And he just was very surprised by it. He just didn't know, I guess copper had this kind of value. And people don't realize copper is in a lot of different things we produce and make. So
yeah, definitely. So I think it'll be a good alternative. Also, some people looking at not only copper, also looking at lithium stocks, lithium miners, lithium ETFs. But I want to really encourage you when you're looking at a particular industry that a lot of people think is going to be hot, look at that whole value chain that's going to make that particular industry hot and try to figure out what are some of the places that are going to be essential to where they're going to be needed. And it's not going to be just kind of based on whether or not they can sell this particular item to consumers. They're going to be needed from like a B2B standpoint. And if they can position themselves real well, they can be very profitable, even though they may not be very well known.
So one of the stocks they were talking about in here, best copper mining stocks for watching May, it says Southern Copper Corporation. So I just wanted to look them up and see what they're doing. They're up 5% right now. Let me look at what's been doing the past 6 months. Okay, past 6 months. Let me see what past year. Kind of wild there.
Yeah, kind of volatile.
Let's see the past 5 years. Okay, what do you think of that chart?
So it's a good, see a decent. So we've seen that they dipped, and then they've been moving up on that 5 year really, really hard.
They were $25.41 March 20th, 2020. I feel like March was the month of kicking everybody legs out.
Yeah.
Everybody legs got kicked out.
See how hard they moved up since March. So it's been a really, 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 really hard climb out of that hole since March. And we understand one of the reasons is because EVs and alternative energy became really, really hot. And then also a lot of people anticipated Biden, if he won, he was going to move really hard in that direction also.
So the past 3 days, people are saying it's overvalued, slightly overvalued, but not too much. And they're saying why you should be interested, of course, is what you're talking about. Most years, so this in 2018, it was $54. Way before that, it was $26.
Yes.
So 26 might be the true, because it keeps falling back down to $32 every time you see the big dips. This one was the biggest, and it was $25. Which looks crazy, but it matches over here in 2017.
Yeah, and so that was that big dip after COVID. So we look at that 5 years. So we may have 25, 26. So what I would look is when I'm looking at individualized companies, you know, which ones do we think are being able to drive in some type of consistent revenue? Because you said it might be a little bit of overall exuberance. So you may want to look for a dip of it. Maybe if it sells off, people start taking profit. Can you get in and then ride it back? And can you get in and ride it back up? But another reason why you may want to look at ETFs, because they're a combination of the best companies. You can have a basic understanding of who the best companies are, and then let the ETF manage the percentage of the holding as opposed to you having to try to move in and out of positions yourself.
Yeah, some of the subsidiaries are in Peru, Argentina, Mexico, and I don't know what that. I think that's Peru as well. So that company is out there working it. Let me see. Also, another one it said was Newmont Corporation. Let's take a little peek at it.
I heard of them.
Yeah. Newmont sitting around 67,000, but let's look at its 5 year. Oh, wow. Look at that one. That one's super volatile.
Yeah. See, it's super volatile. Now, it still moved up really hard, but it's super volatile over the 5 year.
It usually stays around $33.
Okay.
The lowest it's been was 2019 was $30.15. May 19th. Let's see what happened in 2020. 2020, it kind of stayed up, except for here, which is March 13th, 2020.
Yeah.
39.
Yeah, and it dipped off because of COVID, and then it ran back up. And so what we're seeing with a lot of these companies is that after COVID, they attracted a lot of investment. And we're seeing that. And I think that a lot of that has to do, like I said, is at the actual industry, where a lot of people started to really get hip to the alternative energy space, because I've never seen people, especially in the investing space, talk about alternative energy as much as they are now.
That's crazy. Yeah. Okay. Yeah. These get very interesting companies. Also, I think of it too as, as precious metals. Everybody's like precious
Yeah.
metals. I think that adds to it too a little bit. Let me see. What was the other company? See if that's anything cool. Let me see here. Oh, stock. Oh, this one's let's see. 5 years. Can you see it there?
Yes, ma'am.
All right, it's $93 right now. It went up $1.80. Looks like at the close. It's usually the lowest it was March 20th. You know that date.
Yeah.
March 20, 2020, it was $36.
Okay. But see, before that, you see it's 5 year. It had some dips. It was kind of level. It was very gradual.
$31. Yeah.
Yeah, it dipped. So we're seeing it coming up out of that hole really, really hard. So like I said before, is that we want to try to figure out, has the environment changed to where this stock is valued at that based on the actual revenue? Some people like to look at fundamental analysis. Some people like to look at the chart. I would try to figure out what is the volume on this particular company at those new prices, and can the volume support these new price points? And then who are the institutions that are in it? How much institutional buy-in do they have? And do we think that they're going to kind of be in these companies long term to support these new prices?
It looks like London owns it. Yeah. Sorry. Excuse me. Okay. All right. So I had to show that. And then the next article, basically, let me get over here to this other one. Oops. It said copper is the new oil. Low inventories could push it up to $20,000 per ton, analysis says. And this is on May 6th.
Okay.
You think this has something to help do with the pushing it up?
Yeah, definitely. I mean, people, like I said, that space is really hot right now. So what we don't want to do is get caught up in the hype and think it's just going to run up forever. But if we think that it's going to be an essential element for this industry that everybody claiming is going to be the new industry, if everybody really believes, especially in companies like in countries like China, where EV cars and all this alternative energy is going to be this new push. I did a video a while back about how a lot of big capitals pushing for carbon negative. They want companies to invest in initiatives, and they also invest in companies that are pursuing that particular goal. If we really think the world is going in that direction, you may want to look at these type of companies that service that industry from a B2B standpoint, that don't have to be consumed with the consumer, but just keeping their B2B business relationships. So these spaces are really, these commodity spaces are really hot spaces. They don't necessarily get talked about because they don't have a lot of times the high profile CEOs, but they're very valuable spaces because we start talking about the commodities market, but also the futures market. They literally trade these particular securities or sometimes these contracts 24 hours a day, because this is a worldwide industry as opposed to looking at a company that may just have business dealings inside the United States.
The thing that I find super interesting is I think you did a video on it about people being entertained. A lot of what I see on CNBC and all that Fox Business is the flashy kind of business owner that started this cool new startup, when really, long-term old money stuff like metals and stuff, you're like, oh, that's boring. That stuff right there, that's where the money's moving. So I think we get our flair of drama, especially. I think what really kicked it off in my mind is the lady who, oh God, what's her name? She had $1 billion company, blonde hair, blue-eyed lady, and it ended up being a nothing burger company. Do you know what I'm talking about?
No, she was what industry was she in?
She was in medical.
I know you're talking about.
Yeah,
Theranos.
And they were trying so hard to pump her and pump her and pump her, and I was like, chill out, dude. Like, And she became that nothing burger, and so now I feel. There you go. Thank you, Roscoe. I feel like now every news person is like, let's see if we can catch another nothing burger, and it's going to be hard. I don't know how that even got like that. I know there's a documentary on it. I'm going to go watch it, but I was like, that's crazy.
Yeah, I remember her. Yeah, I remember that. I think I had read a book about some of that. I read a really good article about it. Yeah, that was crazy.
It's like the billionaire that was, and I was like, girl, you was betting high. I don't know where they got her hiding right now. She's probably hiding on an island somewhere. CG3 asked, the CEO at AMC said that there was 3 million new shareholders that hold the stock. Good gracious. The total public float is 417.82 million shares. What happens to the stock if the float dries up?
Okay, so CG3, I don't think the float dries up because the only way the float dries up is the shares are not available to be traded to the public.
Okay.
So the float is the shares available to be traded to the public. So I'm not necessarily certain how the float could quote unquote dry up if what you mean by the float eventually becomes not accessible to the public. Because most people are going to allow their shares to be traded. Now, let's say I own 1 million shares of GameStop and I decided that, I'm sorry, 1 million shares of AMC. And I decided that, you know what, I'm not going to allow my shares to be traded or even borrowed through my brokerage. Right. That's going to eliminate the float. But the question is, why would you do that? So if our goal is to actually trade, why would we exempt ourselves from trading? And the only way you know the value of the stock is to trade it on a day-to-day basis. So unless you're long-term AMC, and I said before, is if you're long-term AMC, you really need to look at the actual marketplace that they're operating in. Ask yourself why you would be long-term and believe that their share price long-term is going to be over what has historically been long-term, unless something changes about the market. Like we were talking about with copper, we believe the market is going to change. So for AMC, do you believe that the market is going to change to where their share price can now justify a much higher price than what they've traded at historically? And a 417 million share float, it's not a large float, but it's also not a small float. So it's enough float to where there's a lot of liquidity in that particular market. And also, and I don't want to get into a really deep stock conversation, the market maker's job is to make sure that there's liquidity in that market. And they also have shares that are publicly available to be traded. And so if you believe the float is drying up, what I would tell you to do is observe the daily trading volume. And when you start to see it decreasing, then you know something is going on to where people are not trading their shares. But then what happened is that the market makers will do something to create liquidity in that market, because the job of the market maker is to be the buyer of last resort and to make sure that that market stays liquid for trading. That's their job.
Sounds good. Sounds good. Roscoe's quote is kind of funny. He said, talking about she was the next Steve Jobs.
Yeah.
They said she talked from the bottom of her throat in interviews to sound like a man. Now have to go Google that and see how she talked.
I remember that. Yeah. I remember that. And my brother-in-law told me that if you were Elizabeth Holmes, you would have never got as far as she got. She had a lot of built-in bias that allowed her to get to where she was at, because really her business model really didn't make a lot of sense medically, but she just she attracted a ridiculous amount of capital.
Yeah. Well, and again, that's like that's what I tell people is who you know.
Yeah.
A lot of times it's who you know when it comes to pitching some of these companies, because even when you look at Gary Vee, when they pitched him Uber and he was like, imagine that. Imagine you go to your best friend and like, hey, friend. And he's like, meh. He still talked about that. And so we were gonna go talk about green energy, right, this week, and kind of but I'll go ahead and let you kick it off. Yeah,
I mean, what we want to really look at is, so they've been talking about green ever since I was in college in like 08, 09. And it just really, nobody has ever really, because it's going to take a large amount of capital to invest in it. So what we got to understand is that a lot of our world has been built on old school fossil fuels. That's how we pretty much built the world we live in. And we took a lot of capital to build that, and we built a lot of infrastructure to facilitate that. If we're going to move away from that world, we're going to have to invest that same amount of capital and the same amount of infrastructure into that. So there's been a hesitancy to do it. But what we're seeing now is that there's a big push to move in that particular direction, because a lot of people feel like it's the best thing for the planet, and it's the only thing that's really sustainable. So what we're going to kind of see, I think, over the next decade, even longer, is a big push into green. But I think that we're going to still somewhat have fossil fuels still be kind of parallel to that, because there's still a lot of old money sunk in the fossil fuels, and they're not going to give up their business model without a fight. So it's going to take a minute for us to transition. But I do think a lot of the renewable, a lot of the green initiatives are going to be the thing, because we talk about electric cars as if that's something new. We've had electric cars for a very long time. It's just they can never create a marketplace for the car.
Yeah.
Well,
I mean, even every time there's a winter, it's always these Prius videos where like my car wouldn't start. Like they're like, you would die. And I'm pretty like it's just very funny how they market it. So SunPower, when we were talking about renewable energy, 4 renewable energy stocks to watch in May, one I looked at was called SunPower Corporation.
Okay.
Well, what's interesting about this is the 5-year. and it's falling.
Yeah,
It's going down.
exactly.
It's going
Yes.
down.
So it's
Now
going back
they
to the mean.
announced in October of 2020 that they were going to split into two companies.
Okay.
What are your thoughts about that? Where is this going to
So
drive down to?
so this is probably not a really well managed company, which is
Hmm.
why that it was down so bad. And
Hmm.
then now it's spiked up, and then now it's starting to fall right back down. I don't know why they would be doing the split, but they may feel like the split is better for them from an operational standpoint. So we
Hmm.
want to look for is renewable companies, especially solar. Like if I was looking at solar companies that we think actually have good management and have a good business model and have a good case to where they can understand how to go out there and get a piece of the market. So we know that part of what people are saying that Tesla is a renewable energy company. They say Tesla is really not a car company; it's really a renewable energy company. But Tesla's really still trying to build up their renewable energy division. But if they can be successful in it, then that can really be where a lot of their growth comes from, as
Hmm.
opposed to trying to sell cars. Because I don't think Tesla really wants to be in the car business. I never did. I just thought they did that
There's solar
because
power.
it's something. Yeah, it's something that people can relate to. It's cars,
Hmm.
especially in America. But I don't think they want to be in the car business because the car business is really a hard business to be in.
It is. So this company that split into two, this is the other company that, of course, got created in October, well, August
Okay.
28th. This part of the company focuses on solar panels. The other one
Okay.
focused on various energy. So you can see they've been red this whole time. They've
Yes,
been
ma'am.
bleeding. So
And
I
what
don't
you
know if
may
this is
see
good.
in this what you may see in the solar space is that, and we see this in a lot of times when you have emerging markets, is
Hmm.
that a lot of companies fight for market share. And then what we do is we try to figure out what companies are going to win the fight for market share. And then a big, well capitalized company like Tesla just comes in and buys all the accounts.
Yeah,
And so we may see that in that particular space. Well, in the solar space, we get a lot of smaller operators. They fight for market share. They fight to develop an actual book of business. They get to a certain point, and then a company like Tesla, that's really well capitalized, just comes in and buys their book of business from them.
for sure, for sure. So this one is
Yeah,
ePhase Energy. This is their 5 year. They are
yeah, I
in
heard of them.
California. They focus on software driven home energy solutions, as far as home energy storage and web based monitoring and control. So this company, they've been like nothing, 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 like $1.54,
Yeah,
$3. And they were $29 August 2nd, 2019. They dropped down again here March 20th. You know the number. They went to
yeah,
$26, and now they're at $122.
22. Yeah, yeah. And
At their peak,
what a
they were
lot of
at
these
190.
and with a lot of these what you kind of do is you're betting on the future.
Mm-hmm.
I showed it in phase at one time, so I remember them. But they have a lot of people, especially with in phase, that really believe that they're going to actually figure it out,
Yeah,
and they're going to be a major player in the future.
because they
So a
have the
lot of
storage
people,
component.
yes, ma'am. So a lot of people,
Hmm.
when they're looking at, especially the solar space or any type of alternative energy solutions, their attitude is that this is a 10 to 20-year play.
Hmm.
Yes, ma'am.
Yeah, I'm looking at their batteries and their storage kits on the right side of the screen. I mean, that's the biggest thing people complain about. Like, well, you can't store the power. And I
Okay.
was always looking at people like, okay, I don't understand. But that does make sense. Like, why put all these stuff on your house if you can't even store the power? And that's what people were complaining about in
Exactly.
Texas
You can't hold
during,
it.
yeah, during the storm. So they
Yeah.
have a solar microinverter, and the energy dropped. It dropped like in March some 13% over 5 days. So that's why some
Exactly.
people are
So then,
worried.
so that company now, I don't know what their biggest consumer market is based out of, but let's say they actually get legs and they start to establish themselves, right?
Hmm.
Then Tesla comes in and says, well, we'll just buy you out. Then that particular company shoots up to the moon. And then also, if you're a holder of that particular stock, so I think that's a play that a lot of people are looking at, is that as this particular space becomes more and more established, will the bigger operators come in and try to buy them out? Because I think we're going to reach a point eventually where your public utility company is also going to have renewable energy options. So then the question is a lot of public money going to start running to these particular companies? Because there's companies in my area, what they're called publicly owned utility companies, but it's all old school energy. So I think we burned coal somewhere out in the woods of Florida to get to
Hmm.
energy for our electricity. Well, what happens when they start to move in that particular area? Well, it may make more sense for them just to acquire somebody that already has that specialty and just absorb what they do, as opposed to trying to build it up from scratch.
Part of the whole Tesla play in my mind is California is just crazy. Their policies are crazy.
Okay.
They've been on this one-way track for a long time. Instead of moving to Colorado or Las Vegas is too hot and too close to California. Two, Colorado has 300 days of sunlight, but most of those days are cold days. Putting Tesla in a plant in the base, in the heart of Austin, Texas, where
Okay.
you have for the next 10 projected years people moving here, and the housing is still building out this way, not vertical. The legs for solar power here in Texas, if you're a company that can get in here, because I mean, I'm telling you, I know two guys. The first guy is very organized, but the second guy is just a 26-year-old Hispanic guy in Houston who was like, "Yeah, I want to start a solar power company." He literally hired friends off Facebook, run around knocking on doors, and made $1 million.
Yeah.
And he didn't even have good business structure, any of this stuff, right? And when somebody's doing that in the market repeatedly, like when you're meeting multiple people in solar that's doing that, like literally, like you're in the middle of a gold mine.
Yeah.
What would have been his business if he had structure and hired extra salespeople, right? So I just see Tesla being here to be like, yeah, sure, we'll sell a bunch of cars, cool, no problem. We'll have a bunch of plug-up stations here in Texas, but it's the solar game.
Okay.
Like I think they're gonna. I mean, I'm already seeing Tesla panels on people's houses, so I think that's the play here, and it gets them from under all the regulation of California. Also, California folks are crying every day about how much the cost of living is. Can they really afford to put solar all over the houses in California? I don't know. All right. So that's just my two little thoughts on.
No, I mean, I feel you. And if Tesla can get a footprint in Texas and they can just keep moving and hit the whole Southeast, because the whole Southeast is it's sunny all the time. Except if it's not raining, it's sunny.
I mean, the only places you avoid is like New Orleans, where the roofs blow off and flood, and then like the Gulf Shores. But other than that, yeah.
Yeah.
And I heard this guy saying when you move to somewhere, you want to move somewhere where you can recruit family. He was saying only two places you can really recruit your family to move with you is Texas and Florida.
Yeah.
And I was like, yeah, I can agree with that.
I feel you.
Okay. Sorry, go ahead. I looked up other renewable energy companies. The ones that came up were Algonquin Power and Utilities. I know that's north.
Okay.
They're $11 billion stock. And then Northland Power. And then the other one was Brookfield Renewable Partners.
Okay.
The shares of this $13 billion company are market beating 130% over the past 5 years. And that's not even including its $3 dividend yield. I love when they try to say it's a respectable dividend yield for 3%. It always cracks me. I'm like, for who? People with a lot of money.
Yep.
See,
they can get a lot of shares.
Put the stock in here so you can see it.
What's it being?
Put the 5 year up here. Okay, this is the 5 year.
Yeah. See,
it's crazy.
It's running up. And see, so what's always interesting is that when we start talking about the meme stocks that are like under $50, they never see these companies. So to me, these companies have a better potential long-term success than a lot of the meme stuff that is like, because they're actually operating. So they're actually in business. Some of these companies like, and I'm not trying to be disrespectful, but like, we are going to try to make a battery, but like everything has to go right for the battery to work. But we still want to get capital from the public markets to finance R&D of the battery. And then we want to trade at $35 to $50. But we're not we don't have a business, we don't have a product to sell, we don't have a customer base, we don't have anything. We just kind of like have an idea that we're trying to test to see if it works. It's amazing that people will invest in that as opposed to a company like this where they're actually doing business and they're paying out a dividend. So you're getting something for owning the stock. So it's always interesting, but like I said, a lot of these businesses seem boring. They don't seem like attractive. They don't seem exciting. And I think that's why a lot of times people don't necessarily talk about it. But a lot of times,
hard to make memes on it.
Exactly. It's the boring, unattractive stuff that seems like it's meat and potatoes that long term makes people billionaires.
Ian, I don't know if he could be messing with us. He's got 500 shares of AMC. He's holding to 1,000.
Okay, well, good luck, Ron. I mean, I hope you make $100,000 off of it. To be real with you, I'm not against your success. It's just I think that it could have some challenges to it, but I hope you make 100,000 as opposed to the 1K, because everybody else is making money in the market, so I want you to get you some too.
I'm so serious. You don't even know. Okay. And what was the other one you wanted to hit on? Was it ARC?
Yeah, we're going to talk about Kathy Wood and Arc Innovation.
Mm-hmm.
And so one of the biggest things that, we know that over the past year, Kathy Wood has been like a celebrity, especially online.
For sure.
She's kind of moved into kind of the mainstream shows like the CNBCs and things of that nature. If you look at her ARC Innovation, it's the ARC Innovation one, the ETF, that specific ETF. Around the top of the year, it's been selling off really, really hard. And one of the reasons why it's been selling off really, really hard because there's been a big rotation out of tech. And then also the way that particular ETF is weighted is that it's really weighted heavily towards Tesla. Well, Tesla has also been selling off since the top of the year. So when you take your ETF and you weight it really heavily towards one company, when that company's up, your ETF is up. When that company's down, your ETF is also down. So what we're seeing is that a lot of people are getting out of that particular ETF and they're trying to really figure out another way to take their money. That can pop back up. But what we want to find out is that she was a superstar because she was investing in a lot of speculative companies that were very, very high growth and they were running after COVID.
Mm-hmm.
Now that it may not look like that anymore, is she going to be able to maintain her star power? Because we talked about on this show before is that there's a lot of fund managers, but for some reason they selected her. However, if her ETFs are not performing really, really well, will she still get selected? Because we know how the media is. They build you up to break you back down.
And this is a good price. 109,
Yeah.
Come on now. I'm looking at the 5 year though. Let's
Look
at the 5 year. Woo!
See what I'm saying? So she ran
running.
up really. She ran up really hard right after COVID because, like I said, she was in a lot of the growth tech, and we know that tech ran really hard after COVID. After COVID, everybody ran their money and put it into tech. So with this company being tech based, it ran really hard. Also, with it being Tesla based and primarily being really weighted and being overly weighted in Tesla, it ran up really hard. But if we look at, let's say, the past year, we've seen that ever since we came out into this new year, it's been kind of selling off. So we want to figure out, where does this stop at, right? Mm-hmm. Because does it go back to it's kind of like its early 2020 price, or does it start to consolidate? But we're not seeing any consolidation. We're seeing it just continue to move down.
2020 was April 3rd, 2020. We talk about April. It was $40.
Yes, ma'am.
And March 20th, which is the day that everybody got hit, was $37.85.
So it's had a great run over the past 365 days. So it might be, like I said, some people might see it as just time to take profit and wait to see how it starts to consolidate and maybe move back up.
Do they pay a dividend? Let me see. They pay an annual dividend of $2, which is 1.8. That's not super exciting unless you own a ton of it.
I feel you.
See, and here's why I always say it from this perspective. People like 3 to 5%. That's great. I'm like, nah, give me 10 to 15%.
Yeah.
Because I'm from a real estate space
and
other investors.
Game. Exactly.
And then when I come down,
real estate game.
I remember what stock did I have that did really well? It was a REIT. I had a REIT that did really well. People were like, oh my God, it's so volatile. It was like 9%. I was like, really? This is volatile? And so it's a different mindset. So 3% because it's like, put it to this, if anybody's watching this video, if you retire and let's say you have $1 million and you have 4% returns annually, that's enough for you to live well to another 20 years. But that's the old school method of counting. This new school method, I don't know. It just depends. But if you had $1 million and you can withdraw like 4% or a smaller amount, or you're even the pension funds they have, as long as they make 4%, they're okay.
Yeah.
So this is the thing.
Because they're dealing with that such a massive amount of capital. So they'll take that 4%. I mean, a lot of these people will take anything close to 10. If they had anything close to 10%, they had a hell of a year. Yeah. So we got to see with Kathy Wood if her funds don't continue to perform lights out.
Come with it.
Is she still going to be like the selected person, the superstar, or are they going to move to somebody else? Because like I said, she's not the only fund manager, but her fund was performing so well over the past 365. They kind of socially promoted her. And we're not taking away anything. She knows her stuff.
Well, I think also too, they were talking about what she's involved in. They're like, from the perspective of vaccines and shots and like the moral dilemma for ETFs. Do they invest in these companies that are providing the shot, or do they don't? And so that was some of the things they were talking about this past week with her.
I mean, she's going to probably invest where she feels like she can get a return at, because her job is to get a return. That's why she's essentially been promoted into this particular position, and she comes out of that space. So if she doesn't have a moral dilemma with the vaccines and stuff, and it's getting a return, she go for it. Because the only thing I won't invest in personally is prisons. Everything else to me is
Yeah.
fair game. I'll do cigarettes, alcohol, whatever. Only thing I won't invest in. So I think it's kind of like a person by person scenario. If they don't have any moral dilemma about it and it's going to give you enough an acceptable rate of return, I tell you to go for it.
Yeah, the prison thing, I remember they talking about what's his name, Michael Jordan, all these people. I'm like, listen, y'all,
Yeah,
these people are not even touching this. Their fund manager touched this. Does he
exactly.
know? He don't know. like y'all mad at him about shoes and sneakers. This man ain't never said a word.
Yeah,
Just out there gambling all his money away.
I feel you.
That's all I'm saying. Um, but yeah. So let us know. Hey, listen, there is a course that you have that helps
Yes,
us make
ma'am.
money whether the market is up or down. Break it down to us. Let us know
Okay,
about it.
so one of the biggest challenges a lot of people have is that they can make money when the market is going up, but they don't know how to
Mhm.
make money when the market is going down. And really the reason is because they just been taught to buy stocks and hold them with the anticipation that the stock is going to go up, similar to our brother that's in the AMC that we hope makes $100,000.
Mhm.
However, there's another way in which you can make money on the market, whether the market goes up or down. It's called trading stock options. And so what
Mhm.
I've done is I've created a course that we've had a lot of results with people becoming successful, right? And utilizing some of the principles that we teach with the goal of getting you to $2,000 a month in income and then using it as a platform to build off. We've been successful in doing that. If you reach out to me, I can give you the case studies, people that have retired from their job, people that have hit that particular number, and people that are getting ready to hit that number. To not sound arrogant, to not sound pompous, but everybody that has taken the course and actually applied what I taught them is making money in the market. And they're making more money and they're making money easier than they ever thought they could, because essentially what the market does is it opens you up to a whole new realm of possibilities and it really shapes your brain to get you to focus on making money. So this particular course is kind of module based, it's video modules. I also offer an hour of one-on-one consulting with me. I also have a Discord group that allows you to create some type of community so you don't feel like you're trading by yourself. And I guarantee you, I will continue to work with you until we get you to that 2K month mark, because I know you can do it. You just have to apply yourself. So the course is called the highest paid part-time job in the world. And the reason why we called it that is because once you start to really understand the markets, you can hit that 10K. You can hit that 2K a month, which is going to be a
Mhm.
little bit over 20K a year, essentially working part-time. So I have a member in my course. A few days ago, she did some plays in the morning. She made her money, and then she and her daughter the rest of the day did facials. And the reason why she's able to do that is because she just applied herself to the curriculum. She understood what I was trying to teach her. She got her mindset together, and she makes her money out of the market. And this is the woman that retired from healthcare as a result of her having success in the market. So I want to really bring this to you and tell you that if you really invest in this particular curriculum, I'm not going anywhere. I've been doing this for about 4 years, going on the 5th year. I will continue to work with you because I know that you can have the success, but you just have to start changing your mind about how to make money in this particular market and start developing a skill set to where even if the market is tanking, you can make money. Because to be very frank with you, all my options plays right now are put plays on companies selling off. And those plays are positive right now because these companies are selling off, because I was very confident that these companies will sell off once the market corrected out of tech, is what we're seeing them doing right now.
Yes, I'm telling you guys. Listen, it's skills that will make the difference for the next 3 or 4 years for people.
Yes, ma'am.
Um, Treasure Rose said, "Nice." Yeah, it's all skill based, you guys. A lot of the things that you're gonna learn, and what we learned in 2020 is people who had certain skills stayed home.
Yeah,
Right? Everybody always promoted like, "Oh, I have a nice job. I'm in AC." No, no, no. Do you have a skill that pays regardless if that company keeps you or any company keeps you? Can you go on
definitely.
about your business? Um, and that's the point of the stock market, you guys.
Yeah, definitely. And definitely she's talked about as a skill. So one of the things that I was very happy is that a lot of people that I knew that were affected by COVID or had to risk their safety themselves or their families of going out in the house and making money during COVID, because they kind of understood how to play the options market. They didn't have to do that, or they were able to see a path to transition out of it. I knew a lot of people that were working in healthcare that were making a lot of money, but because of COVID, they had to expose themselves to a lot of danger. And so
Mm-hmm.
they kind of realize that, you know what, the market, the pay isn't necessarily worth the risk, because I got children, I got a family, and a lot of them went into the market to try to figure out how they were going to make their money. And a lot of them were successful because they applied themselves. If you're smart enough to be a person and working in healthcare, you're smart enough to understand the market. I tell people all the time, if you can take the risk of driving down the highway, the market is not going to be a big deal. We've been taught to be scared of this space because of a lack of exposure. But if you can drive down the highway to get from point A to point B, the market is way less risky than that, because you can lose your life on the highway. You would not lose your life in the market. So we just got to kind of change how we see things and understands that if we really desire to upskill ourselves and to give ourselves some level of income autonomy and income independence, the market is the best place to be. And it will develop your character to where you see the world totally different, and you start to understand a lot of the opportunities that actually exist in the world that normally weren't present themselves in front of you before.
For sure, for sure. And also, I think you look at all these companies differently, right? You ever see where somebody goes, oh, you buying stuff you don't even have stock in? And even though rappers have made that kind of quote funny and like popular, it's true. It's like, if you start looking at the world through the stock market, like, do you own the company of stuff you buy? Right? Family Dollar, like the stuff that you see people go shop at. It completely changes my perspective on a lot of companies, because now I'm like, oh, where does this come from? Who owns this? What subsidiary owns this? You know, what umbrella of a company owns this? And so I just find it interesting. Stock market can be very interesting at times.
And I just want to say one last thing before we close is, once you start to understand that you can make money when the market goes up or down, you don't have this fear of high inflation. You don't have the fear of, well, Biden's going to raise the tax level. You start thinking like, I don't care what happens in the economy because I know I can go make some money. Yeah. So I got to worry about if this particular initiative or bill is passed because it's going to affect my life. I'm going to make money regardless of what these people do, because I know how to make money in the market, and the market trades up or down. It doesn't matter. You can monetize both sides of it. So one of the reasons why I think it's really important is that it takes away a lot of the fear and a lot of the anxiety that you've been taught to have about the life, because you've been taught that if this small thing changes, I lose my whole occupation, or I lose my ability to make money. When you get into these markets, we made a lot of money during COVID while everybody else was panicking. Why? Because we know how to make money when the market was going down. So I was happy that the market was selling off because I had a lot of put contracts. So I was happy that the cruise line industry was, I wasn't say I was happy, but I was able to take advantage of the cruise line industry. Cruise line industry was going down because I was able to take advantage of it, as opposed to worrying about, oh, well, the cruise line industry is going down. So even if I own shares in cruises, I make money on put contracts when it goes down. I buy at the bottom and just let the thing walk itself back up, which is what eventually it's going to do as we start to reopen the economy. So it just changes your whole perspective on the world. You lose that anxiety because you know you're empowered with the skill set to make money regardless.
Well, and also too, cheaper price. Some people are like, oh my God, to get 10 shares of this stock, it'd be like $12,000. Well, but options trading, you could probably get 10 shares, but it'd be a different company. And so there's layers to it. I don't want to muddy it, guys, but there's layers to it, and you can get in at a cheaper price point. And that's probably what a lot of people are looking for. So guys, this is your girl, Erica. And Tulip Personality said, thank you. I'm so happy I purchased your course.
Oh, I appreciate it.
Leave them a little video review. Leave them a video testimonial. I'll hop on the phone if you leave.
Okay.
Can't volunteer his time like that. All right, you guys. This is your girl Erica from Just Stock Profits. Dave, let them know where you are and where they can find you.
Yeah, you can find me on YouTube under Diamond Dave. You can find me on Instagram under Diamond_Dave. You can also find me on Facebook under David Williams. So just reach out to me. Let's connect. If you got any questions about the course, just reach out to me and I'll help you out.
All right, sounds good. Thank you guys for coming in today.